Hello, everybody. Welcome, welcome, welcome. It is Monday. We have a full week. Seems like we haven't had a full week in the markets for quite a long time. And we got one now, and it's a big week especially with the jobs number coming out on Friday. More data to confuse us all and to confuse the Fed on what they might do or not do with rates. Hello, thank you, Gene. Right on top of things as always. Everybody else besides Gene, you able to hear me, see me okay? There we go. Steve, Brad, howdy. Um, Man, what do you say about this market? I think it's unbelievably resilient. Um, Overnight last night, don't know how many of you were watching S&Ps at a low, got down, I think about 35 points or so. Dow futures were down a couple hundred. Most of that was not even having to do with any sort of tariff talk or anything with China, but it was on the escalation between Russia and Ukraine. We saw oil prices spike. They're now have retreated quite a bit, and the market's now up. S&Ps are up 10 points right now. You've got the big mag stocks with the exception of Tesla and Google, although Google's made a really good run off of its low today. You've got Microsoft up $1.50, Meta's up $18. Let's see, Amazon is up 0.5%. Apple is even unchanged here. So, you've got some strength here still in some tech. Trying to look across the board to see if there's anything else that really stands out for me. I will tell you volatility, volume, very, very light today in the S&Ps and SPY. Contract-wise, there were a lot of, there we go. There were a lot of upside out of the money call buys in the VIX this morning. My broker buddy was pinging me all morning long. In fact, let me pull these up here. June 55 calls. Let's take a look at those suckers. June 55 calls. Looks like, yep, what he said, 17,000 of those traded 11 cents. And then July 90 calls. You can see right here. Those traded 12 cents. Now, it'll be interesting to see what the open interest on these is tomorrow, because coming into today, there were about 19,000 of them, 16,000 traded. So it could have been closing. I don't know. So we'll be able to tell tomorrow. Yeah, destroy that like button. Thank you. We'll be able to tell tomorrow when we see what the open interest is. Okay, and then the last one that he told me about, August 60 calls were purchased, 20,000 of them. Yeah, so there's another one. I don't know if this is going to be open or closing. So if we look at this right here, there were 60,000 of these open interests going into today, 20,000 plus traded. They traded for 51 cents today. So very, very possible some of these are closing. We'll know tomorrow for sure. All right. So last week, actually, before I start this, as we just posted up here, smash around, please. Smash the like button. All right, help us out. Subscribe, thumbs up, all that good stuff. All right, last week, when I was asking you guys for some ideas, Theta, time decay came up, okay? Because even though people know that Theta is one of the Greeks, it can be very hard to understand, okay? And we just went through, actually, right before I got on here, we went through in the op vol room a situation of a deep in the money position that does not have a lot of Theta to it. So let's discuss how Theta works and which types of positions are good for gathering Theta and which types of positions do we have to pay. Okay, so remember this. This is something I was taught literally 30 plus years ago on one of my first days on the floor. Options are a wasting asset. Okay, options are kind of like a new car. You go into the showroom, you buy a new car, and the second that transaction is completed and you're out the door, car's already worth less, right? So very similar with Theta. But where a car loses value over time, that's pretty linear, right? It's not a decaying asset that accelerates over time like an option premium would be. So Theta measures the inevitable loss in value of an option as time passes. Okay? Of all of the variables, all of the Greeks, everything, anything that has to do with option pricing, the passage of time is the one thing that is certain. Stocks can go higher or lower. Volatility can go higher or lower. Interest rates can go higher or lower. We don't know. But the one constant, the one thing that is certain is time will pass. Okay? And as time passes, the extrinsic value or the premium amount that is built into the price of an option becomes worth less and less and less. Okay, so if you buy an option, okay, it's kind of, I don't know, it's almost counterintuitive, but this is the way that it is. If you buy an option, you actually have negative theta. And the way that, I remember that when I was first starting out is it's negative theta because the value of my options becoming worth less every single day. Okay, if I sell an option or if I'm short an option, I have positive theta. Time is on my side. Okay, so we're fighting time when we're long options. Time is on our side when we're short them. Does that make sense to everybody? We're going to go through some examples here. Does that make sense? And that's why very often if we have a position, especially coming into expiration week, when that's really when the switch flips and you really start recognizing that theta, that option decay, when we have a position coming into expiration week, that's when we really need to consider rolling, closing, because if it's a long position, meaning that we have negative theta, we're paying theta, that value is going to start losing quicker and quicker. So as we all know, I think we all, but we're going to review it anyway, this is the theta or time decay of an option. It is not linear, meaning that let's say you have 10 days to go until expiration and there is 50 cents of extrinsic value or premium. Okay, 50 cents divided by 10 days, you would think that it would lose 5 cents a day. It doesn't work that way. It doesn't work that way. And as you can see here, what I was just talking about, the closer and closer we get to expiration, the more accelerated that theta becomes. So it is not linear, meaning a straight line like that, where it loses the same amount every single day. So options that are much further out in time, they don't have a lot of decay. They may have a lot of extrinsic value to them, but if you're going, 2 months, 3 months, 6 months out in time, very little time decay at the beginning. And again, you can see if you look at this curve compared to timing, how that decay really starts picking up the closer and closer you get to expiration. So is that Paulie just asked, does the rate of theta decay stay constant or does it vary? This is exactly what happens. Does that make sense, Paulie? And I'll bring in some real examples here too. We can look at different options on different stocks and I'll show you how the theta is, especially for ones like this week, so we can really see how it accelerates. Okay, Paulie, great question. Okay, so let's talk about different options and how they decay. Okay, so in general, at the money options, okay, options that are closest to where the stock is, regardless of whether expiration is today or this week or 2 weeks from now or a month or 6 months from now, at the money options have the most theta to them, have the most extrinsic value. Okay, at the money options. And you'll see that in this chart down below here. This is our at the money right here, and you can see that that will always have more theta. And again, we'll go through some live discussion on this. Okay, out of the money options, they have some theta. They don't, it doesn't really decay a lot except that last few days or so. And as it says here, does increase as expiration nears, but affected much less than at the money options. And then deep in the money options. That's something that we were just talking about in the room in that First Solar put spread example. Anybody? It wasn't First Solar. What was it? It was yeah, it was First Solar. Not much theta in deep in the money options. Why is that? Why is that? Anybody? So, for example, in I don't know, let's pull up First Solar. That's what we were looking at before. Okay, so here is First Solar. Okay, here's this week's options. The stock is trading roughly 150. Okay, if we look, let me scroll this down a little bit. Okay, if we look right at the money, okay, so let's say with the stock 150.60, the 150 strike call that expires this week is worth $4.50. How much extrinsic value is in that option? Total extrinsic value, not daily theta, but how much premium is built into that option. You guys remember how we measure that? How we figure that out? Anybody? Anybody? Okay, Brad, I like that answer. So honestly, I'd rather have you say that. I don't know. Okay. To measure how much extrinsic value is built in, there we go, Steve, but that's not the extrinsic, that's the intrinsic. To measure how much intrinsic or extrinsic value is priced into an option, okay, what would the value of this 150 strike call be if this were expiration? If it was this Friday, 3 o'clock, the bell rang, and the stock was 150.60, what would be the value of that option, which would be its intrinsic value or real value? What would that number be? Now, it wouldn't be zero. If you own the 150 strike call, that gives you the right to buy stock at 150, right? There you go, Gilbert. Very good. Steve, there you go. Gene. Okay. So if that gives you the right to buy stock at 150 and the stock is trading 150.60, that means the intrinsic value, hopefully you can read my scribble, is 60 cents. So anything over that, anything that the price of that option is trading right now, which happens to be 450, less that intrinsic value leaves $3.90 of extrinsic value, or what's also known as time premium. So that means between right here, right now, and this is a live number, so between right here, right now, and Friday expiration, that $3.90 that is currently built in to the price of that option, that $3.90 of premium or extrinsic value, that's going to zero. That is going to zero because we know at expiration, what's the value of an option? Well, it's either zero if it's out of the money, or it's intrinsic value. There is no extrinsic value left at all at expiration. So between now and Friday, this thing has to lose $3.90 because of theta. It doesn't mean that the price of the option is automatically going down, because if the stock goes up, great. But $3.90. Okay, so let's take a look at this. And what I want everybody to focus on is the line down at the bottom here that says theta. Okay, right here. So even though there is $3.90 of extrinsic value premium, today's theta is only 3 cents. Meaning that if everything else stayed the same, the stock price didn't move and volatility didn't move, rates didn't move, everything else stayed the same, the value of this option would only lose 3 cents today because of, and that can't be right. And I know that can't be right now that I'm going through this, because I believe I have this put spread position still in here. So disregard all, I'm going through that. I'm like, that can't be right. That was that put spread that I had in there. So let me redo this here, guys. That's better. Okay, so now theta today, 51 cents. That makes more sense. No pun intended. So there's 5 days or 4.5 days remaining, right, between now and expiration this week. So if the theta was linear, meaning that it lost the same amount every day, that would mean if it was 51 cents today and there were 5 days left, I'm not even doing 4.5, but 5 days left, that's only $2.55 in theta. And we know that there was $3.90. Does everybody understand that? So what I'm going to be able to do now is I will just move the day ahead 1 day. So it's 1 day closer to expiration, and we're going to see how this theta of 50 or 51 cents changes. So let me just change the date to tomorrow. Okay, and we got a little bit of acceleration, a couple pennies more. Now let me push the date ahead to Wednesday. And now you're starting to see that acceleration. It didn't just pop up by a couple pennies like from Monday to Tuesday. Tuesday to Wednesday was a significant increase in theta. And now if we go Wednesday to Thursday, it's really popping up now, that increase. Okay, and then Thursday to Friday, Look at that. So this is a real live, I mean, we're live in the markets right now, real live example of that acceleration of theta. Was everybody able to follow that? Awesome. So that was an at the money option. Okay, let's take that off the board. Let's look at an out of the money. Okay, let's go up to the 165. Okay, the 165 call expiring this week, you can see only has 50, whatever, 60 cents of theta. Okay, so at the money was 390. Little further out of the money, 60 cents. And now let's look at something that is deep in the money. So let's look at like the 125 call. Okay. How much theta, how much extrinsic value is in the price of that 125 call if the stock is 150.60 and the price of that option is 25.60? How much theta, how much premium extrinsic value is there? Anybody? All right, anybody else? Okay, Steve says 0. AZ Bob says, what is a $1.25? How do we figure that out? Well, same way, guys. If we were at Friday afternoon expiration and the stock was 150.60, what would be the value of the 125 call? It would be right where it's trading right now, 25.60, which means that it's only intrinsic value. There's no extrinsic value built into that option, which means that option, the 125 strike call, is acting just like stock would act. No different than if you just had 100 shares of stock. Does everybody see that? Does everybody understand that? So there's literally no theta in that option. Okay, so this was an example just to kind of show that the at the money options have the highest amount of premium, thus the highest amount of theta. To sell, best to do at the beginning of an option if doable. Well, let's go through some strategies here, guys. Let's go through some strategies. Okay, if you want to take advantage of theta, meaning selling theta, do the market makers have the power to accelerate or decrease theta? Sure they do, Paul. What changes? That's a really good question. What changes the value of an option or the price that an option is trading at? Time is going to be a constant. Okay, so a minute from now is going to be 1 minute closer to expiration. Excellent, Gene. So supply and demand, right? And what happens to the price of an option with supply and demand? What happens if all of a sudden there's a lot of demand for that 150 call that we were just looking at? What's going to happen to the price of that option? It is going to go up, right? I'm not going to keep selling something at the same price if people are still wanting my product. There's going to at some point become a balance of supply and demand. So until the buyers stop, the price of that option is going to go higher and higher and higher until the buyers are done. So if the price is going higher, that means the amount of theta, the amount of extrinsic value, is also going higher. So when you ask, do the market makers have the ability to change that price? Yes, but only in the essence of supply and demand. So Paul, does that make sense to you? Or Paulie, sorry, does that make sense to you? Have limits to their power. What power do market makers have? Market makers are there to facilitate retail and public trading, not training, trading. Okay, so a broker or a retail trader like we are, or a market maker, we're all looking for that balance, which gives us the quote unquote right market. The right market at any one specific time is where the buyer and sellers are even. Okay, great. Okay, so actually, before we go through this, let's get to the Hulkster here. Okay, everybody get your Decay up there. I know a couple people on Thursday were asking, how do I get my name onto the wheel? This is your opportunity. All you have to do is type in Decay in the chat, and we'll get you onto the wheel. Okay, we'll give it another minute here, and then let's go back to our example here. There you go, Julia. Excellent. All right. All right, let's go back to our example here. We'll let everybody have another opportunity. So if you want to take advantage of theta, one way to do it is through selling a vertical spread. Selling a vertical spread, a short vertical spread. Okay, and selling a vertical call spread would look like this. Okay, selling a vertical put spread would look like this. Okay, now, if we happen to sell both a vertical call spread and a vertical put spread at the same time, what is that? What is that position? Ooh, Ricardo getting in just under the time limit. Nice. What is that called? It's called this, an iron condor. Now think about the positions we take often when we're looking to sell premium, when we're looking to sell expensive options. We typically go to the iron condor because in the iron condor, we're collecting theta from selling a call spread. We're collecting theta from selling a put spread. We want to do that when there's a lot of theta to be collected. We want to do that when implied volatility has risen so that there is more extrinsic value, more theta built into the price of those options. Okay, another way to take advantage of theta, and we use these most commonly, is by doing a time spread, whether it's a calendar or a diagonal. I have a calendar up here, but whether it's a calendar or a diagonal, when we are selling the closer dated near term option and we're buying one further out. Sure, the option that we're buying further out definitely has theta to it, definitely has some decay to it, but not as much as this near term. If we go back to this chart that I had put out at the beginning here, okay, if we're short an option, that's in this time frame right here, and long an option that's in this time frame right here, you know that you're going to get that acceleration to the short one, while the long one doesn't decay that much right away. Does that make sense to everybody? And Kevin, an option that has 100 delta to it, if an option has close to or 100 delta, that just means it's so far in the money that it's really like a stock position. So if you think about it, does a stock position have any, does the value of a stock position change when implied volatility changes? No. Does it change over time, the passage of time, theta? No. Right? So if you have an option close to 100 delta, which a stock position is, then all of the Greeks, everything associated with it, will be very similar to owning this or being short the stock. Okay? So typically, John, when we trade a calendar or a diagonal, to take advantage of the most theta, okay, where is the most theta in an option? At the money or slightly out of the money. So that is typically what we're looking at, is selling that option that is just slightly out of the money and buying one that is, closer to being at the money. That's where you'll get the most bang for your buck in terms of being able to collect theta. It's a great question. And if you look at the calendars or diagonals that we put on in here, that's the pattern you'll notice. All right, everyone. Any suggestions for tomorrow? Any suggestions? Because I love your guys' suggestions, because it means you guys want to know. And you guys are thinking about this stuff. David, charm? Are you saying I have charm, or I use Charmin, or what? All right. Analysis steps you take to send a signal. Okay. David, I've never heard of a Greek called charm. I'm not sure what that is. Okay, Paul, something around earnings. The analysis that we take to send a signal, certainly happy to do that. Spreads to capture dividend moves. That's going to be a tough one, Brad, but I'm happy to do that. How to choose prices for an iron condor. Ray, I think we did that one on Thursday. If you want to go look and watch that video, the recording from Thursday on iron condors, but I'm happy to discuss with you again. How do we choose entry and exit prices? All right, these are all good ones. I got a lot to go with here. All right, let me get to our wheel. And it's a new week, so everybody is up to be able to win. All right, Tom, William, AZ Bob. Who's it going to be, William C or AZ Bob? William, on house. Is William in the house? I hope so. You were the one that we went through that first solar. Wonderful. There he is. William, shoot me an email. There it is on the screen there. prosperswag@prospertrading.com. Give me your address, size swag, and we will have some more fun tomorrow. All right. Julia said you still don't see your name on the wheel. Let me see. Let me go through here and see if you actually typed in the chat Decay. Yes, you sure did. Okay, now let me go back to the wheel here. Here it is for full disclosure to everybody. Julia, are you on here? Yes, you sure are, Julia. Right here. Now, right here. Okay, good. Just making sure. All right, everybody. Thank you very, very much. We will see you tomorrow. I appreciate your time. Before we leave here, what our S&P's doing. S&P's are flatlined, up 6 points. All right, everybody. Thank you. Have a great day. See you tomorrow.